Welcome back, Real Tech Talk episode number 50, Deuce. I brought up from deep south, aka Philadelphia, my boy Matt Einheber, who's going to talk about an obscure business that makes a ton of money that you may not heard about it and how he's bringing technology to create that efficiency. So sit down, pay attention. TitleEQ CEO on tap. That's why we're here, bro. This is Real Tech Talk. Boom shakalaka. So who the hell are you, bro? You know, what are you into? What do you do? Yo, you can keep it real here. Tell me about these real estate players.
Eric Brody is the managing principal of CEMVC LLC. All opinions expressed by Eric and podcast guests are solely their own opinions and do not reflect the opinion of CEMVC LLC. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Clients of CEMVC LLC may maintain positions in the securities discussed in this podcast.
Welcome back to episode number 50, Deuce, Real Tech Talk with Eric Brody. Today, we brought in my man from far and wide from Philadelphia to talk about a very not known, sort of obscure part of real estate that is massively important and huge, and he's taking a tech-enabled spin on it. It's title insurance. My man, Matt Einheber, came in, and I know I messed up that name. That's why you get to correct it. From Philly, deep Philly, to talk about his new business, TitleEQ. Thank you for rolling through, bro.
Yeah, man. Good to be here. Thanks, Eric. Yeah, no, people usually chop that name up, so it was pretty good. I'm impressed.
All right, good. I mean, I'm trying, and I am a New Yorker where we meet every distinct type of personality, so I should know.
No, it's okay. I said earlier, years ago, I should have dropped the Ein. People have no problem with Haber. I don't know why I kept it together. It's too late now, so I'm
All right, so listen, here's what we like to do. Let's talk about in one sentence what the company is and tech-enabled, and then I need you to give a little background to our audience as to what you were attacking in the real estate space, because it's somewhat obscure, but it's a billion-dollar industry. Yeah. So go on.
Yeah, there's a lot to explain and kind of lead up to where we got today. And title is oddly obscure. I say that's like a double negative, but not really. It's oddly obscure because every single transaction pretty much in real estate involves a title in some way. Title, escrow, settlement, a process. Anyone that's involved in title, you know, whether you're a lender or a principal or buyer, seller, whatever it is, these adjacent industries tend to know very little about what's going on in title. You know, it's like a black box. Just everything goes to title, and they don't really know what happens after that or during the process. And so it is like obscure, you know. But
so what's TitleEQ? Like, give me that one sentence.
Bottom line, TitleEQ. We're a title agency. We manage, we facilitate real estate transactions, and we do so using technology that I've developed, in my life and in my career with other companies and with this company as well, to manage, mostly focused on the workflow process, the cost enabling through management of debts and liabilities of real estate. Right.
All right, so let's break it down because I think what you said is super dope. So first is, you didn't say that it's a tech company. It's a tech-enabled company, and we'll get into that. But let's start with, so what is title? And so that our audience will briefly understand on a very basic level, why do we have title and what is it?
Yeah, I think the industry's done a really crappy job of explaining what actually is the point. What are you getting with title? And so as a result, today especially, we're in a time right now, a political climate where everyone is just elbowing title and like, why is this thing? What is this thing? Title does a couple of important things in a transaction. One of those things is management of debts and liabilities against real estate. Debts attached to real estate everywhere, and different debts attached to real estate, and different debts behave differently against real estate in every place that you go, right? Whether it's, in New York, they break up into zones. You got zone 1 and zone 2, right? The city, Long Island, Westchester County is all zone 2. The rest of the state's zone 1. In some places, it's very county by county, like, for example, Pennsylvania. In some places like New Jersey, and I'm using the states around us, our tri-state area, judgments behave by the whole state, kind of has rules about how they behave. Some places it's county, some places it's town or township and municipality. Where I'm from in Philly, if you get a parking ticket, it attaches to your real estate. If I sell that property without any aid or enabling. I just find a buyer, I sell the property, I have an unpaid parking ticket, for example, or a gas bill or a water bill. I mean, that granular.
So it's an encumbrance to title,
It's an
which could
encumbrance to
be
your property,
a lien from a contractor, a first mortgage debt. And title, it's really insurance.
That's
you're
correct.
covering that liability.
We're managing that. We're guaranteeing it. People think of it as insurance, and it is insurance, but at the end of the day, it behaves more like work that we do and then a guarantee that comes with that work. So we, pull, they say, right, a title search. We get all the information. That's data that just lives in the county records, the state records, wherever else. There could be many different databases. There could be 3, there could be 9. It depends on where you go, how these things behave against real estate. We pull it out, we look at that, and we say, all right, what's out there, right? What might be out there? Maybe there's a judgment against a guy named John Smith, and maybe John Smith happens to be the name of the owner. Is that the same John Smith? I don't know. So that requires a lot of evaluation.
But the reason that you do that is because you don't want anyone third party to a transaction, not a buyer or seller, claiming some right to that land.
100%.
Right? Like that's really at the end. And then you're saying there's debts to it. So you got liens, you've got parking tickets, you've got encumbrances, you have, easements. So there's all these things that could basically impact that piece of real estate, whether it's a claim or not.
Correct.
And title responsibility is navigating that, solving it so that when you transact, it's clean and smooth and that person now owns it free and clear.
Correct. And it's complicated because each one of these municipalities, cities, states, whatever, they're motivated to create new rules so that they can tax in different ways. A person dies, now you've got to file a thing. If you don't file the thing, it does, the tax gets attached to real estate, whatever. There's a million different versions of
which is probably why, and you'll get into it, why being tech enabled is valuable, because that type of variability inherently would have been like an individual human. And now you'll tell me a bit about so what you've created. So title, now we get it. Banks need it. Buyers need it. Sellers need it, right? It's ensuring that you get it free and clear, right? Like you paid all this money, you dealt with all this risk in the real estate. At least now it's yours, and you pay a fee for that.
Yeah,
right?
that's the insurance side of it. Title companies also tend to manage the transaction, which is really communication and human trafficking management, right? And then obviously money, right? And escrow. They become the bank in the transaction. They take in all the money, often, not everywhere, not in all places, but in many places, and they disperse all the money.
So almost like the plaid or the, credit card processing of real estate.
Sort of, yeah. It's bigger, more dollars are being transferred,
obviously,
more complicated, but yeah, for sure. Yeah.
Okay, cool. All right, so now TitleEQ is an enabled title company.
Yeah.
So tell us what technology made that application to this space.
Yeah, technology that I created a few years back called Title Box really basically built a knowledge base of all these debts and liabilities that that can attach to real estate, how they behave against that real estate, how they attach in different places, right? We covered 13 states, right? And we started selling that both as a technology, licensing it to other title companies and attorneys so that they can function their business with it, right? As a mechanism to operating their business. It's not the whole business by any means, but it's a mechanism, an important one. And then we started delivering that as a managed service as this company. Title.
Right. So first, though, which I think is fascinating, and just to break it down, is so first it was like this SaaS. You can plug and play. We've created these tools for you, title company, of these redundant tasks that can now be automated.
Yeah.
Was it a rules-based engine, or what was it? Was it an app? What was it?
Yeah, it's a rules-based engine. We use AI essentially. So the title search comes in, and that's a vendor product, right? You buy a title search, it comes in. Title search is a list of problems. You got an estate, you got a deceased person, you've got a judgment, a lien, a mortgage, whatever. Now we attach the potential solution, and it's not binary, like black and white, like here's the problem, here's the answer. Sometimes it can be, but usually it still takes a human evaluation. But it's like, okay, this happened. Now this is all the information you need to know about that. And sometimes it gets super granular down to, here's what you can do to solve this problem. It's a municipal lien. You got to call Doris in the courthouse. Here's a form you got to use. Here's the contact. Sometimes it can get that deep. Sometimes it's like, here's the statute of limitation. Here's the statute. Here's the rule of the law. Now look at it, make a decision. But we want smart people, experienced people in this industry making decisions all day, not doing administrative style work. And you're right. You said it earlier. To date, this and elsewhere, still right now, every title company, even the big ones out there, even the giant, national underwrite, it's humans, right? They have, Eric in New York who knows 5 boroughs, and that's it. That's what you know. Or maybe you know the state, or maybe 2 states at the most, and you're just an expert. But like your diagnosis and what you're going to do, the path of least resistance and how you choose to deal with a thing, or whether you ignore that judgment or deal with it, like those things are subjective. Maybe you're having a bad day. Maybe you get hit by a bus today. You didn't come into work,
But tech doesn't care.
Tech doesn't care.
So you can basically now, or you created within this first product is more like, this is the issue that popped up. There's 4 resolutions, right? On this resolution tree.
Yep.
That's an automation. These are the things that you can do. So it's not an infinite amount of solutions. So it's almost like you have a service, but that service provider, that human, knows the ways in which it could go. So you've sort of created an efficiency for that human.
Yeah, for sure. We discovered that there is a right and a wrong, meaning that like there's 3 to 6 things you can ever do to cure a thing. I've never found more than 6. And there is generally a path of least resistance, an order in which they should go. But when you just put it in front of a human being, no matter how they've been 30 years experience, they know what they're doing, they generally you're not going to get the same diagnosis and the same answer from those people. And they waste time researching and everything else. That's exactly.
So you created these tools. When did that come out?
That came out, I built it 2018, 2019, and really took it to market in 2020.
Wow. And
right as the pandemic started, like literally 5 minutes before the pandemic.
So from a macro thesis, transactions being down maybe is a benefit to you or not, but it wasn't as many transactions. But sometimes when there's less transactions and there's more suffering, people are willing to try new things.
Yeah, it was super interesting because we came out, I tested it for about a year successfully with 3 or 4 clients, and then said, all right, we're going to take this thing to market. And in February of 2020, so when I say 5 minutes before the pandemic, right? And then March, April, and May was like dead, right? You couldn't do any, there was basically no business being transacted. However, we heard from a lot of title companies and attorneys out there that said, hey, we're scared. We don't know what's going to happen, but this is an opportunity we feel to reorganize our company, shift things around, get more efficient. I think we're going to need it. And then June happened. And June of that year, I mean, if you're in the real estate transaction business, it just exploded. Like real estate transactions went off the chart. And for about 15 months, there were more transactions than I've ever seen in my life. So it was like this weird trough and then explosion. Both things played to our favor. So it kind of worked out that way. We've since shifted the use of this. Again, that was a company called TitleBox.
Right. So TitleBox creates these tools, right? Which is just to stay with that, which is fascinating because it's like people are concerned about cognitive labor being reduced. And it's like your thesis is more, no, I'll take the redundant tasks where we know this variability, that we know there's only 4 or 5, so that human can be there in the moment to make an actual human decision. But the repetitive tasks, TitleBox is going to take care of.
Correct. And keep in mind that this industry is a little bit unique in that it is a 10,000 hours kind of a business, right? You're familiar with that thing? 10,000.
No, tell them.
There's I forget.
Oh, 10,000 hours to mastery,
maybe 10,000 hours. Right. You do something for 10,000 hours, you become a master. So I'm probably miscrediting who said that. But this is 10,000 hours kind of business.
Wait. Producers?
Yeah.
Malcolm Gladwell.
All right, I did credit it properly.
We got him here for a reason.
Great. There's no college major, for title examination. You grow up, no one sees what like the title business, right? It's not visible. You see what lawyers do when you're a kid. You see doctors, you see truck drivers, you see hairdressers. You might decide to become one of those things. You don't ever see title and decide to become it. So it's a really, you trip into
side
this.
note though, but one of my most successful friends that I know in the universe had a title company and he was able to sell it like 4 times. And just a shout out to my boy Jared Fine at Kensington Vanguard because homeboy is chilling. So you better, all these young guys out there, you better pay attention to title too. You know?
It could be a great business, but you really, it is definitely a deep knowledge business, right? You really had to know what you're doing. And it's not readily available for a young person to learn about and to come into. And so the pool of labor, the point of that is the pool of labor is not that big, and I'm watching it over the course of like the 20 teens, I'm watching it get smaller and smaller and smaller.
You're seeing that in accounting too.
Yeah.
But then you're seeing this automation, what you created in TitleBox, getting more and more valuable because if you have less labor trying to get into the business, it's the automations, it's the variability and the and what you're creating sort of in this workflow analysis that becomes more and more important.
Yeah, and I think it's super needed. I saw that not being a hindrance to, the AI is going to take our job, but more like, no, you need help doing your job, and there aren't enough people to do this job effectively.
So you were saying, so what's then TitleEQ? It's powered by sort of
yeah, exactly. So about 2 years ago, so TitleEQ is a newer brand. I've been in the business for 20 years. We can talk about some of that backstory if you care to later.
Once we get through here, I want to hear all about why the hell you got involved.
And how, yeah. About 2 years ago, I decided that, selling this as a managed service to title companies is not the highest and best use of what we were doing, right? Among other things. So I decided I'm going to get back into the agency space. I had owned and run a title agency for about the better part of 15 years. Before that, I had sold that company. And so this was a short period of time where I did not own a title company, and I was focused on the technology and decided I'm going to get back in the agency space. Now, that 15 years taught me a lot, right? And it taught me the things that got me to create TitleBox in the first place and create this technology, among other things, among other technologies and workflow. And now I want to own the process end to end again.
Can we just back up? Because I think that it's such an important point that I think that the audience, and even when we started this show, and even when I got into technology, doesn't understand. And you were like the poster child for it, right? Which was, first, you don't have domain expertise, right? A lot of tech is coming out, and their assumption is we should sell this platform to many, right? And the many are like, well, is there an NOI or an ROI, or is it really helping, or what's its efficiency? And they're like, oh, it'll change your universe. And then you tell a real estate guy to change my universe, then you better put up or shut up, because we're Machiavellian. It either works or it doesn't, right? Yep. So you were in the business, you see that there's a redundancy of things. We should make some automations. You create the automations, right? Yeah. And then you're probably running around trying to sell it to prove to people that it works. And you're like, wait, why am I proving it to them? F them, fuck them. I'll do it internally. Yep. And as I grow, you'll see that it works so well. And by the way, I would say that to every technologist out there. Why are you selling to others? First, do it. And then they'll be interested, because it's like they don't want to hear you.
Yeah, 100%.
So you're like the perfect poster child of what I think is like 2024's lesson is like, yes, use tech. Use it for yourself as a real estate company. Become huge. And we were talking about it. And then everyone will find out why the hell it was so successful.
Yeah, I agree. It's a bit of a trap, because a lot of technology ideas out there maybe don't work so well, right? You can put a shiny object on them, polish them up, you can sell them, you can get a VC to invest some money, you can sell SaaS. And SaaS is the best business model in the world, and that's why there's so much SaaS out there. And I feel like today, like in the 90s, right, when there was, no technology, right? People were using pen and paper for stuff, right? And then the commercialized internet came out, and the curve of efficiency went up like crazy. And I feel like it's a bell curve. Now it's come down, because now, if anybody who's running a business has 28 different apps that they use to run their business, and now there's one of them solves a 20% problem, and that's great, and one of them solves a 0.5% problem, and it may not be worth it, and every single thing has 10 choices of solution to go with, and you got to pick the right thing, and they got to talk to each other and whatever. So it's become inefficient. Because SaaS is such a good business model, and VC money, LPs poured money into venture capital to invest in SaaS, and so people went out there and invented stuff. But at the end of the day, and especially with real estate, I agree with you. Now, today, this climate, this economy has come full circle, where now I think you're better off spending more time to create something that actually works. And maybe that's a SaaS product. Maybe it's a product for others, perhaps, but maybe it's not. Maybe it's a product for you to operate. The challenge with that is it takes a lot of time, because you're right. You have to be a domain expert.
Yeah, but I think that's another really relevant point that people really don't understand. They were going to capital called venture capital, right? And you're in real estate. Real estate moves a little slower. It's a slower curve. Yes, there's probably some businesses out there that move fast, and you're seeing a lot of people investing into the brokerage businesses, transactions, blah, 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 blah. But real estate's moving kind of slow, right? And then you go to venture capital, and it's like we were talking about, nitrous. It's like, yo, right. I need 10 million customers by tomorrow, go. And then it becomes this public company and sold, and it's amazing, right? But what about if your business becomes like a $200 million business, a $400 million business? Well, it certainly isn't public and doesn't need venture capital, but super successful. So it's also like this overall paradigm of applying technology principles of venture money to a real estate business moving slow. You're seeing it now. You're seeing companies laying off 20%, 40%, valuations tanking, because I bet you those companies are dope. like amazing. Not to shit on anyone, but like I read about VTS recently, or people are getting rid of staff at better.com, and you're like, yeah, because you're pouring into tech and it's doing really well. It's just not a hockey stick, right? So it's like another thing that it's like perfect. You're like, yeah, I saw that. I'm a real estate domain expertise who gets tech. I'm going to show you. And you create TitleEQ, right?
Or maybe those companies are going through a cycle or tough time, and companies go through cycles and tough times. It's not a 2 or 3 year run. It's not even a 7-year run. Yeah, it could be a 15 and a 25-year run. That's business. But the hardest thing about business and growing a business is aligning everybody's interests, right? What's good for everybody is good for everybody, and what's bad for everybody is bad for everybody. And that means employees, especially salespeople, that can be really hard to do. How you create compensation packages for people that are so they're incentivized for the right things. And investors and partners. And when you take on venture capital and then you're selling a product to like that, you see it. It's really clear how those interests, the interests of the investors are not well aligned with the interests of the product or the company, or maybe the founder, but or certainly the employees or whatever. Their interests start to get misaligned, and that's where things go wrong, I think.
So tell me, how is it going, right? So now you're doing what I think is genius, and I think it's the move, and it's something that we're doing as well for my company. Like, how is it going?
Yeah, it's going great. So
because you had the experience when it's a non-enabled title company. Now you've created this product. Are you seeing that either millimeter or millisecond advantage, or are you seeing greater advantages, and is it growing?
Yeah, for sure. So I ran like an old school kind of a title company for years, and we were pretty ahead of the curve, and I would find anything, new that I thought worked, and I would inject it and, whatever. But it was a title. So I learned every angle of this thing for the better part of 15 years. And now the way we've chosen to take this thing to market is through, obviously it brings efficiency, but it brings a lot of things. So now we've got operating teams, right, operating our direct business, right, clearing and curative, using our technology. And then we have what we call a table-ready team, which is doing the settlement and escrow and the human management side of the transaction. And it enables us to have people that are client-facing, that usually when a constituent to a transaction, a buyer, seller, a lender, whoever, contacts somebody from the title company, they're talking to somebody who's also on the factory floor. They're ordering payoffs. They're waiting on hold for these things. They're doing these old school processes manually, and then they're tasked with going to a settlement table or returning your phone calls or 800 emails. It's a very traffic-heavy business, and so I use this analogy a lot. It's like being a chef and a server at the same time. You can't do it. No matter how good you are, it doesn't matter. The business is setting you up to fail, right? Even if you're the best chef and or the best server, it doesn't matter. Maybe you can do one table and be okay, maybe two, but like after that, it starts to break down very quickly. And so,
by the way, I think that if you're listening, you should go back and listen again to what you're saying, because it's exactly where tech can create the advantage into our real estate businesses. What you said is like, if I'm going to be a chef and a server and the line cook and the sous chef, like I get nowhere and I'm constantly not performing well. If I can figure out what I do best and then have support using technology that's reducing your overhead, mitigating cognitive labor, giving efficiencies, and allowing the human to be in the place at the right time. And if that isn't what tech is supposed to do, and lastly, that's exactly what the top 17 publicly traded companies in their annual earnings call started speaking about what tech is supposed to do.
And those operating components have to be fluid with one another, which is potentially more technology. It's certainly more coordination. It's one of the reasons I decided I wanted to own the process end to end, get back into agency from TitleBox, from simply the technology, because we were delivering a technology that became a managed service, which involves some humans, which involves humans on the client side communicating back with us, at least to a degree. If I gave you an iPhone and said, here, there's all these cool things on it, all these cool apps, if you don't take the time to learn it and input your information and like participate, it's just a coaster. You know what I mean? It doesn't really help you.
So true. Managed service, right? Like, I agree with you. It's not a full automation. We're not there yet. The human wants to speak to the human. It's not full automation, you know? If you're getting responses that are all digital, like eventually you're like, I just want to speak to someone.
Yeah.
That's where we're at, right? You got to meet the human where they're at.
And I disagree with a lot of companies, both in the title space too, and in the world where they're using AI heavily in human interaction and connection. I disagree. I think that's the wrong part of the thing that you should be using it on. You should be using it on the stuff we don't see so that humans can spend more time dealing with humans, because I don't know about you, but now it's been forever. This is like our whole adult lives where, you call or you reach out, customer service, now you've got bots and you're being tossed around. It's just, it's not a good experience.
Word up. Like, I think me and you are so aligned. It's crazy, and everyone should be listening, because if you're really interested in starting these businesses, what you're saying is so true. And what's fascinating is you're like, I had to leave to go to tech to realize it was a mix of both. So tell me, what was your background? You said you owned, or you were a principal at a title company before, but what was it in your background that said, let me go explore tech and then bring it back to as a businessman? Like, what's your background? Where are you from?
I think I am cursed with not being satisfied with just shut up and make your money and just like run your bit, and that's just not enough for me. I get bored. So that's
your trauma from your childhood.
Yeah, maybe
that's a different podcast. We're starting that later.
Maybe,
that's later on.
Right. Guy in the next room is going to come in.
Yeah, he'll come in. We'll talk about why you don't feel like you're enough.
Yeah. But no, I was young. I got out of college. I started. This was like around 2000 or so, late 90s, and I started an ATM company. We own private ATM machines. A buddy of mine was like, ATMs. I'm like, interesting. So I got into that business, and it blew up. And it got to a crossroads where I decided to sell the company. I won't go too deep into that rabbit hole unless you care to hear about it, but it's an interesting business story. But I decided to sell the company instead of scaling it, and then took that and went. And I started selling mortgages. I was a loan originator, right? I needed something to do. I was still like 24 years old. And I saw the opportunity in title sitting there. We were, a high volume mortgage shop. I was selling a lot, and we saw a lot of failures from our title company that was in house. And the leadership of that company was, not the most impressive ever. And I was like, if you're competent, I see that there's opportunity here. And so I got in the space. It's a tough space. I mean, there's a lot of difficult things around this business, around getting clients. What I basically spent, so I started a title company. I started a settlement services company then. We were doing closings for other title companies and for national lenders. And then after about a year, that kind of pivoted to a title. It was very busy and very, but the technology for what I wanted to do really wasn't available yet. It was still like 2003. Yeah. So I kind of pivoted to a full service title company and just became a title company. But it was
yours?
It was mine. Yeah. I started the company myself.
I mean, that's an entrepreneurial thing where
organic,
obviously, you have an issue with authority and conformity.
I definitely have an issue with authority.
We'll bring it. It's the second show. Question. That's another
issue.
To
cherry on top of that, I've never really had a job. One time in my life I've ever been paid to show up at a place, and it was a startup where I was the only employee. Other than that, I've had sales gigs where I was really young where I got paid 100% commission and only ate what I killed, and everything else has been completely mine. So I've never really had like a job. So if you want to dig into,
so I get it, and that's dope, right? Because I think that the DNA of the human is what's relevant. So then
I'm not showing that off, by the way. I don't know if that's good or bad. But.
No, by the way, no judging of it. It's just who we find in here is coming from that, right? And if you're interested in that, that's why I like the CEOs, because it's like, so why though the tech side? So I get now you saw. For whatever your life circumstances is, you're like ATM, then you're seeing these transactions, like these people are whack, I can do a better job, boom, you get into it. But then where did the tech come from? Where did that start penetrating into your, into your soul that you were like, I'm going to look at that?
Yeah, I spent the better part. So 2008 happened and everybody got punched in the face and we kind of barely survived. And it was like 2009, 10, 11. 11 was rough, right? Like there were no commercial real estate transactions happening for a period of about 6 months in 2011. I remember it. It was wild. And then 2012 kind of started to get a little bit better. And around that time, 2012, 13, 14, I was like, what am I doing? Like, what is this business? It's so weird. There's so many strange human dynamics that create weird things in this business that are very hard to explain. For example, and I've looked the world over looking for another industry, another business that has some of these characteristics. For example, the person who, in residential, generally speaking, the person who chooses title doesn't pay for it. And the person who pays for it doesn't really understand what they're getting. If you scroll through your banking app and look at every transaction you've made in the last 6 months or year or whatever, you've made a choice to buy that thing, product or service at some point. Even if it's a thing you don't really want, you're like, okay, I know I need life insurance. I got to choose a thing based on price or service or speed and buy. Nobody does this with time. And that creates a certain dynamic. There's other things. So I kind of like step back around 2013 or 14 and I'm like, this business is crazy. It's confusing. How the flow of new business and where to get your clients and how to get business and customers is not very straightforward at all. And there's massive inefficiencies, especially at that time. It was still very old. The business was behaving in 2013 the same way it did in 1987. And so it's wildly manual, and we weren't we were paperless, but that was not very impressive. Many other companies were not. We're still working with like physical files. It was nuts. And so I thought, listen, there's so many inefficiencies here. And I honestly spent a few years in the 20-teens just staring at it. My business was a good business. It was a laboratory more than anything, and more than lean into taking people out to golf and, just chipping away and getting new realtors. We did those things. Obviously, we had a business, but I really spent my time and energy trying to figure out how can this just be there. It's here somewhere. I could smell it, but it was hard to put my fingers on. And I created some other things. In 2015, being in Philadelphia was a very good kind of place to experiment with some data. So I started experimenting with some data. There's a couple of reasons why Philadelphia was kind of the perfect place. But we built at that time, an open data platform that there was bits and pieces of open data there, not as much as today. And we were selling to people buying at the sheriff sales then, tax sales and mortgage foreclosure sales, a quick, like an instant, basically title search and evaluation of the debts and liabilities against real estate. This is what you have to worry about, because those things are supposed to be free and clear after sales, but they're frequently not, and you got plenty of headaches to worry about. They're done very poorly by the city. So we were selling that, and much going backwards to a comment you made a few minutes ago in this conversation was that product. A very, very smart guy who was an LP at a couple of VCs, who really liked what I was doing, and he liked me, and he kind of took my hand and walked me into a few of these places to help me raise money, and it was really appreciated, because this guy was a really bright, really well-respected dude, and he, at the end of the day, he was like, just because you have a thing that works, and it does work, doesn't mean that the audience is the right audience, or that they're willing to pay the right price for it. And our audience at that time was like, at that time, it was an emerging group of were wholesalers, right? And today, like, wholesalers is like this mature space, and a lot of wholesalers grow up and they're doing more sophisticated transactions. But at that time, in 2013, 14, 15, the idea of wholesaling was pretty new, and everybody was green, And so there were a lot of amateurs out there, and they really didn't know what they were doing. It was a different landscape, and they didn't understand what they should be paying money for and what they shouldn't be, and it was and so that.
But the sum of it is data got you in, and redundancy of tasks, right? Which is two things that like everyone is looking at today.
The idea that, and this is an interesting idea, what really pulled me into that and kind of bled forward to what we're doing now is that opportunities for buyers everybody wants to buy distressed anything, right? That's what you want to buy, distressed stuff.
Of course.
But the stuff isn't distressed. I mean, maybe it is real estate, right? But most of you want to buy stuff from distressed people. That's really what you want to buy, right? People who feel like they have a sense of urgency. They feel like they need to sell. They need that money more than the next guy. They need it now for whatever reason. That's who you want to buy it from. And the real estate may or may not tell you that story, but the title does definitely tell you that story. Because if you, and everybody looks at like tax delinquencies and mortgage foreclosures, those are the most clear, most obvious ones. But if you haven't paid your credit card bill or your water bill, or you got back parking tickets, that's a weird example, but you get my point. There's a million other types of
forward
debts.
Indicators of distress, and you're like, we are now finding that.
And there's tons of them.
So listen, this is my favorite part, which is basically I got some rapid fire questions. You get like one sentence answers, all right? In 10 years, where do you hope to see PropTech?
PropTech in general? I hope to see humans doing what humans are supposed to do, and data at its most available that it's ever been, but for human decisions, not AI and not technology making those decisions, but humans being able to easily make
All right,
those.
so then that goes in the next one. AI, is it a friend or a foe?
It's a friend, but it's a real dangerous friend.
And then what is the next big feature that you're going to roll out with on TitleEQ? And I guess you just stepped on it, touched upon it, which is sort of like a forward indicator of potential distress.
Yeah, it's a little bit of what we're doing. And honestly, the way we've really leaned into taking this thing to market is to operate joint ventures with commercial real estate principals mostly and lenders to make them profits and operate joint venture title companies
Understood.
in a way that's never been done before.
And what does 2024, fourth quarter and first quarter of 2025 look like for you?
For me, it looks like a great expansion of those joint ventures. We got a lot of great things on the table, new geography, new states, some national players, some locals too, some brands that everyone's heard of. Really, really exciting stuff coming.
All right, man. Well, listen, thank you for coming up from Philly.
Yeah.
We appreciate you,
Thanks
and
for having
we'll
me.
see you out there.
I appreciate it.
All right,
You'll definitely
brother.
see me out there.
Peace.
Thanks, man.
In conclusion, it's obvious. It's obvious. If you pay attention to the things that we discussed, can you create automations of remedial tasks? Can you make sure that the human is at the right place at the right time? Meet the human where they are at. He built his own tech tools, which I think is the way to go. He started a proprietary, he's using his own business in order to experiment, which I believe is the way to go. He's in 13 states. I guarantee you, because of the redundancies, he'll be in 50 states. Pay attention to that business because it's going to explode. But very interesting that he said he didn't go for venture dollars. It is a tech-enabled company, but he's not stating I wanted venture capital, which needs you to explode 1,000x overnight. I guarantee you his business is massive. He does extremely well and sells it. It just may not be a publicly traded company in 1 year. So pay attention to what he's doing, but it's definitely a medicine.